Okay, so this is the 2019 tabular statement. So the first thing I'm going to do is I'm going to mark it out. So I'm going to take everything from here, okay, and I'm going to put it straight into my tabular statement. All right, so bear with me. What I'll do is I'll have the months along the top here as well. So it's probably going to take me 3 minutes to mark it out. If you're happy to move on to the next section, just skip forward 3 minutes, please. All right, and at least that way you don't have to sit here and watch me mark it out. So I'm going to have assets, okay. And my assets in this case are going to be, my first one on the list there is land and buildings, and then I've got depreciation associated with that, and then I'm going to have my delivery van, so this is all in order. Then I've got depreciation on that, and then I'm going to have stock, and then I'm going to have, as you can see here in the question, it states that I have debtors less provision, so I need to show them separately. So underneath stock I'm going to have debtors, and then in a final account I'd normally take away the provision. So I'm going to have provision for bad debts here as well. Okay, so bad debts. As you can see there, it's separate. After that, I'm going to leave my 1, 2, 3 lines. Okay, and that's going to be my total line going all the way across. That's going to be my total line going all the way across. I'll keep that going in a second. And I can move down to my liabilities. Okay, again, just listing them off as I see them in the actual account itself. So liabilities, the first one on that list is creditors. Second one is going to be bank. Underneath bank, I'm going to leave a couple of X's because that indicates I need a space. Because I will have a working where I have 2 workings on bank. Expenses due is the next one after that. And then I've got my 2 shares. I've got share capital, which is my ordinary shares, and I've got my preference shares, which is what we refer to in the tabular statement as share premium. Okay, the last item then on that list is P&L balance. All right, same crack, leave a couple of lines underneath P&L, or just 1 line, a couple of X's. So that indicates I need a space, that indicates I need a space, and just as habit, just leave 1, 2, 3 stars underneath that. So that indicates that that's going to be my total line going all the way across. All right, so I would simply start by doing my dates. So my first date on that list is going to be the 1st of the 1st. Coming from the tabular statement, we're going to have January, February, there's March, there's no April, there's May, there is no June, no July, no August, there is September, there's November, and there's also December. So that basically indicates to me the tabular statement would obviously go all the way over to that section there as well, okay? Now, I always have a December 31st column, so that way I don't have 6 items in my May column here. It just spreads it out, makes it a small bit easier. And after my December 31st column, I'm going to have my total column. So my lines need to run all the way over to my total. Obviously, if you have a ruler, that would make it a small bit easier. All right, I don't have one on me. Same correct with my total lines here. All right, it's all the way over to the total column, and that's basically indicates to me that both of those figures should balance at the very, very end of my question. Now, once you have that labeled and you have your months in, okay, and you know your gaps and stuff, that's actually quite important. All right, once you have that in, then we're going to fill in the figures. All the figures are coming directly from the actual trial balance itself. So my land and buildings in this case is going to be 660,660. My depreciation is going to be 33. Remember, it's reducing the value of my assets, so I'm taking it away. Okay, and my delivery vans is 85,000. My depreciation on that is 38. Again, depreciation is always as a minus. Stock is 57,120, 57,120. My debtors and provision. So this is a little calculation that I have to do here at the start. Okay, so this is my working sheet that I'll be progressing throughout the question. And again, I'm going to separate into assets and liabilities. Okay, now I have a little calculation. As I stated here, I'm doing the calculation for debtors and bad debt provision. So as you can see here from the question, it states that debtors less provision is equal to 78,280. So technically that 78,280 is equal to 95% because it's the debtors minus the provision. So the debtors in this case, the debtors is going to equal 100%. So how do I find 100%? I take the 78,280, I divide that by 100, and I multiply it by, I divide it by 95 because it's equal to 95%, and I multiply it by 100, and that will give me my debtors opening figure, which is, in this case, is 82,400 euros. Okay, I'm still looking for the provision. In my debtors figure here, 82,400 slots right in there. And I'm still looking for the provision. Now remember, the provision is 5% less than the debtors. So all I would do there was take the figures that's coming from the balance sheet, 78280, divide that by 95, multiply by 5, and that gives me 4120. So they're the two opening figures that are going into my asset section. As I said, there's actually no marks going for both those figures, but when we do my workings further down the question, it's very hard to get them right. So you need to make sure that those figures are correct. So I know the figures are small here, but they should marry up, okay? That's everything in my asset section in. So my total in my assets there is going to be 809,400. So 809,400. Okay, if you can't see it, you can surely hear me. And that brings us down to the liability section. So creditors, in this case, is 64,000 euros. So 64000. Bank was 24000. Okay, again, leave that little space there for my additional bank work, and that will probably happen further down the question. Expenses due, 7,000 euros. My share capital in this case is going to be 450. All right, so all I'm doing is literally copying and pasting everything from the balance sheet, 59,000. And my last one is 205,400, so 205,400. Add them up and I come up with the same figure, 809,400. And as you notice there, both of those figures are the same, which indicates to me that I'm off to a good start. And we're ready to do my actual workings. Okay, so we will refer back to the tabular statement throughout the question, but technically that's the easy part done, and now we're looking at the actual workings. So what we're going to do is, you can see there, the first working on that list is they decided to revalue the buildings on the 1st of the 1st, 2008. So my first working here is January. Again, assets refer to the top half of this tabular statement. The liability section refer to the bottom half. So that's how I'm going to do it, okay? So very, very straightforward. The revalued amount, so it's going to 800,000. Now, so if we look in the trial balance, it was 660. So it was 660, and it's going to 800, which means in this case, I'm adding on 140,000 euros. So that's the figure that needs a double entry. In my land and buildings, I'm adding on 140,000 euros. The double entry for that is, because I revalued the asset, I have to open up a reval reserve. That goes in the liability section, and I'm just going to add on 140,000 euros in a T account. That goes on the credit side, so 140,000. Now you're all familiar with, so that would be L plus B, land and buildings. When I revalue an asset, all my accumulated depreciation in this case goes to 0. So what's in my accumulated depreciation, as you can see there, is 33,000. So there's 33,000 euros in my accumulated depreciation. Okay, how do I make it go to 0? I simply minus 33,000 euros. So accumulated depreciation is normally a liability. How do I make my liability 0? I would simply put 33,000 on the debit. And the double entry is, it goes to my reval reserve, 33,000 euros. That leaves me at 173. Again, always have a quick look there. As you can see, 173 on the debit, 173 on the credit, and I can put that straight into my tabular statement. Okay, so up here, I go to January, I go to land and buildings, 140,000. I go to my depreciation. Now, that has to go to 0. So what you notice here is it's already a minus. How do I make a minus a 0? I simply add on 33,000 euros. And that gives me 173,000. As you can see down here, there is no reval reserve at the minute. So underneath the second line for profit and loss balance, I'm going to open up reval reserve, and it's going to be 173. Again, always keep my two lines for my profit and loss balance, so I can so I'm not squeezing a figure into one item there. So okay, next item on the list, so that's January done. Okay, now we move on to February, which is again very, very straightforward. So we bought a new business. So the business that we bought indicates that, so I might do it over this way now, sorry. So the business that so that should be enough room for both of them. Okay, so the business that we bought had buildings of 120,000 euros. So I'm going to open up buildings, and I'm adding on 120,000 euros because it's increasing the value of my asset. Okay, so 120,000. I've got delivery vans. Again, delivery vans is an asset. It's increasing the value of my asset. So I'm adding on, in this case, 35,000 euros. Okay, the van. Again, when I bought that business, I also bought debtors. Again, another asset, which means I've got more people owing me money, which is increasing the value of my debtors. And it was for 15,300 euros. Okay. What else did I buy when I bought that business? That business came with creditors. So creditors is a liability, which is going to be done on the right hand side for liabilities. So I'll open up creditors. And that gives me, the figure is 11,000, sorry. So that I owe me more people money, so it's increasing the value of my creditors. Okay. Now, as well as that, how did I pay for this business that has the 4 different types of items that I have there? Well, in the purchase price was disregarded by granting the seller 140,000 shares. So I'm going to open up share capital. And I know I'm not going to push over to the question, but the shares are charged at €1 each coming from the finance by section of the balance sheet, which indicates to me that 140,000 shares issued is the same thing as saying 140,000 euros. That is a liability because I owe that money back to the shareholders, and it's increasing my liability, so that's where it's going to go. As well as that, they were granted at a premium of 30 cents per share. Because they're granted at a premium of 30 cents per share, I have what we call a share premium. That premium is at 140,000 multiplied by 0.3 or 30 cents per share, and that gives me 10% of that is 14 by 4 is 42,000 euros. Okay, so that in that instance I'm going to have share premium, and because it's a liability again, it goes on the credit side 42000. Now what you'll notice here is the debits do not match the credits, because in this case I've got 144, I've got 193,000 on the credit, which is those 3 figures added up, and I've got 107, so 170, 300 on the credit, on the debit, sorry. So 193 on the credit, 170, 300 on the debit, which indicates to me that I overpaid for the business. If I overpaid for the business, well then that figure is called goodwill, and the missing figure is always going to be called goodwill. So I've got 193,000 over here, okay? Or at the minute over here, I have a total of 170,300 euros, which indicates to me that my goodwill has to be, so there's 170,300 over here at the minute, okay? Which means to make that 193,000, I have to add on 22,700 euros. So my goodwill figure in this case is going to be 22,700 euros. That is an asset, so 22,700. And we're ready to put that into the tabular statement. Okay, so they're my 4 figures. Go into my February column here. Same principles apply. My billings is 120,000 euros, so 120,000. My delivery vans is going to be 35,000. My debtors is going to be 15,300. And there's no goodwill yet, which means I'm going to have to add it in. Okay, some questions have it, some questions don't. 22,700, 22,700. Okay, add all those figures together, and I'll come up with the magic 193,000, which is the same as what's on the credit side. So go down to my liability section, go to creditors, and I'm going to add in 11,000 euros for creditors. Okay, go down to my share capital, and I've got 140,000. Go down to my share premium, and I've got 42,000. Total 193,000. As you can see, my top equals my bottom. Okay, my top section equals the bottom section, which indicates to me I'm ready to move on to the next month. The next month in this case is going to be the month of March. Okay, month of March. Nice handy working. Okay, so we'll try to get 2 more workings done before I finish up and move on to the second video. I'll do it from this side. Okay, so the month of March. I'll have a quick look at it here. Okay, so the month of March, management decided to revalue the bad debt provision at 4% of debtors. Now, what I need you to understand is as follows. In my tabular statement at the minute, I currently have 2 figures in for debtors. So if I've revalued at the start of that month, I have to take both of those items into consideration. So technically, when I'm doing my provision, I have to get my updated debtors figure, which is technically both of those figures added together. So both of those figures added together are going to give me a total to the value of 97,700, 97,700. And again, that is from those two debtors figures added up together. It's the start of the year plus the new debtors that I purchased during the year. I'm going to multiply that by 4%, and that's going to give me a figure to the value of 3908. Now, how you're used to saying it is old, new, and if it's an increase slash decrease. Okay, so my new figure is 3908. My old figure coming from the tabular statement was 4120, as you can see there. So 4120. How do I find the difference? It's simply 212. Okay, that's 212 now, just to make sure everyone's happy with that. Okay, and that indicates to me that it is a decrease, which is a reduction. So I just highlighted there that it is a decrease. And that decrease, lads, means that I'm technically taking money out of the bad debt provision to put into my own pocket. So that's the figure. The 212 is the figure that needs a double entry. So technically what's happening here is in my provision, which is a liability on the credit side. Again, the reason it's done in the asset section is because it's done underneath my debtors. So as you can see, same principles apply. Provision is underneath debtors. As you can see, it's in a minus. So that's why I'm doing it in this case. And the 212 is reducing my liability. So 212 is the figure that needs a double entry, okay? And the double entry will be, if I'm taking money out, it is considered a gain, and it will go into my profit and loss balance. All right, because as we know, the only place expenses and gains can go on the tabular statement is my profit and loss balance. Just there, that's the only place. And because I'm taking it out, it's going to increase my profit of 212. And in this case, that would be a gain, and the gains go 212. So technically, the figure that needs a double entry is a 212 and the 212. So where would that go in the tabular statement, might you ask? Well, then I go to March, and I know if my bad debt provision figure at the minute is 4120 and it needs to be 3908, well, then I have to add on 212 euros. So it's reducing, which means how do I reduce a minus? I simply add it on. Okay, that gives me 212 on the top line. Go down to my profit and loss balance. Same crack. If I'm taking money out of the provision, it means I'm taking money out, which is going to increase my profit. 212. So it's money taking out of the provision to put into my back pocket, which in this case is absolutely fine. The next working, which is the hardest working, which is going to be the month of May. This is the last one we do before we take the break. You can see there it says receive the bank statement at the end of May. So I always get my lads to draw a vertical line down through that end. Everything to the left refers to the first transaction. Everything to the right refers to the second transaction. Okay, so second. So we're going to focus on number 1 first. Okay, now the secret to success is as follows. When you're doing this first transaction, there's 2 items it can be. It can either be, imagine this is my asset section, this is my liability section. It can either be a prepayment, which is an asset, so I'm prepaying the money for next year, or it's going to be paying the money that I owe from last year, so it's going to be an expense due. All right. Now, this is how you do it. So always look at this year's account. So this year's account is 2018. So last year's account was 2017. Next year's account is 2019. So there's 2 ways that we can go. We can either go to the right, which means it's a prepayment, which is an asset. We can either go to the left, which means I'm paying off money from last year, which means I no longer owe it. So it's an expense due. So depending on, if we go right, it's going to be a prepaid expense, which is an asset, or if we go to the left, it's going to be money that we pay off in our liability from last year, which is going to be expenses due. So depending on which way we go will determine it. Now, how do you know which way to go? We're doing the accounts for 2018. Have a look up here. It says insurance to cover the year 31st to the 4th, 2019. So it's very, very simple to understand that we are going to the right, which indicates that we are going to be paying a figure for an expense for next year, which indicates it's going to be an asset. So coming from the balance sheet, you can see that there is no insurance prepaid here. So the first thing I need to do is go to my tabular statement, and I've established that we're going to the right, which means it's going to be a prepayment, and it's for insurance. So insurance prepaid. So that's what I need to open up. Okay. So when we do this, we're going to have a May working, and just underneath it, we're going to have a December 31st working. Okay. This is going to be May part 1. All right. And then we're going to do December 31st. This is just how I do it. Your teacher might do it a small bit differently. Okay, so we know that there's money coming out of a direct debit of 48. So money coming out of my account is money coming out of my bank account. Bank is located in the liability section. So 48 is coming out, which goes on the credit side. If it's going out, it means it's increasing my overdraft. So bank at the minute, the reason it's in the liability section is because it's an overdraft, which means more money is coming out of my account. It's increasing the amount of money that I owe. So the 48 will go on the credit side there. The double entry is I'm paying insurance because it's insurance for next year. As we stated, it's going to the right, and if it goes to the right, it's a prepaid expense. So that's why I'm doing it on the debit side here. Insurance prepaid, and the figure is going to, so it's an asset, it's going to be for 4,800 euros. So 48. That's the first step. So as we notice here, we're going to go back to the tabular statement, insurance prepaid, go to the month of May, and I'm going to write in 4,800 euros, go to my bank figure, and I'm going to write in 4,800 euros also. Okay, that's the first step. We don't total it up or anything yet, because I still have my December 31st column to do. Now, I'm going to write this down because it makes it a small bit easier. So the secret to success is find the months for this year. Now, I already told you that when we're doing this, we want to see, are we going to the right or are we going to the left? But we know that we're going to the right or to the left of 2018. So I want to know the figure that is for 2018. So what I mean by that is, if I know insurance, which is normally for a 12-month period, okay, because you never normally pay for insurance anything less than that. If 4 months of it relate to 2019, well then the rest have to relate to 2018. So if 4 months relate to here, well then the figure for 2018 is going to be 8 months. That is the secret to success. Because of the 4,800 euros, I'm going to divide that by 12 for the number of months, and I'm going to multiply it by 8, and that's going to give me a figure to the value of 3,200 euros. So that's the figure that needs a double entry, that 32. So because technically that's an expense for this year, I would open up profit and loss balance, because there's only one place an expense goes, all right, and it's reducing my profit, so I would take it away, 3,200. Okay, again, how you do it is you go to your tabular statement, you have a look in your profit and loss balance, you go over to December 31st, which is this column here, and I would write in 3,200 euros, and it's reducing my profit. That's why I'm taking it away. Now, the easy way to do it would be, because I've opened up insurance prepaid, the double entry has to go into insurance prepaid. So 3,200 euros has to be taken away up here. Now, to show you that in a T account, that's the easiest way for the students who find the T accounts difficult. To show you it up here, well, if my insurance prepaid is for 4 months, well then the 8 months has to come out of that figure. So I'd open up insurance prepaid, and the double entry for that 32 is I would reduce my asset by the same amount, 3,200 euros. And that literally just backed up my point there of reducing that figure by 3,200 euros. Okay, that's the first transaction. I'm now going to move on to the second transaction, which is going to be May part 2. Okay, and down here I'm going to have December 31st. Same principles apply. Again, what we're looking for is, we're looking for everything to the right now, the right of this transaction here. A credit transfer received of 8,800 euros to cover rent receivable in advance for the period from May to March. Take notes of that. All you need to know is, for the minute for May, we received money and it was for rent for the entire year, which basically indicates that they're giving me the rent up front. So if someone transfers you money, the first place is going to go to the bank account. Again, bank at the minute is a liability, that's why it's done on the right hand side. Okay, now if someone's paying me 8,800 euros, that amount is going to reduce my overdraft, because bank at the minute is on the credit side, it's a liability. If money goes in, it's reducing my overdraft. So that's why it's a minus figure there. The double entry is, someone is paying me for rent in advance. If they're paying me for rent in advance, I owe them the use of the building, which means we owe them the service, which makes them a liability. So down here in my liability section, underneath reval reserve, I'm going to open up rent prepaid, okay? because I owe them the use of the building to the value of what they've given me. So that indicates the double entry here. Rent receivable, prepaid, and it's going to be for €8,800, which again is my liability. And the reason, I know there's going to be kids asking this question, but why is the liability on the debit side here? It's because it's reducing the liability, and I'm accounting for the liability in this case, because bank is technically a liability. How do I reduce it? I put it on the opposite side. Okay, either way, I've got €8,800, and what you notice is for both entries, if I go here, go to rent prepaid, go to May, I'm going to have a positive €8,800. Okay, and then remember I said, no, this is just for May. And I go to my bank, and I would simply, because it's reducing my overdraft, I would take away €8,800. So what you notice is both those 8,800s cancel each other out. So I've got 4,800 on the top, 4,800 on the bottom, and I'm ready to do my December 31st column. And the key to success is going to be the same principle applies. Find the months for this year. All right, find the months for this year. So again, if we know that we're doing the accounts for 2018, I want to know of the rent, how many months relates to 2018. So the question that arises is, if they're paying me in May, okay, from May, so they're paying me in May, June, July, August, September, October, November, December, January, February, and they're paying me up until March next year, March, which indicates to me that it's for a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 month period. So the mistake that kids will make there is they'll think it's a 12 month. It's not, it's for 11 months. Okay, so you need to do that calculation out first. So when I go to find my figure for 2018, okay, which is this year, 2018, it's going to be 8,800 divided by 11, not 12 like it was up here, because it's only for an 11 month period. And I'm going to multiply it by how many months relates to 2018. So they're paying me in May. It's paying me for May, June, July, August, September, October, November, December. That's 9 months. That's 9 months that relates to this year. So it's not, it's May, June, July, August, September, October, November, December. It's 8 months, sorry, it's 8. All right, nearly I'm backing myself there. Okay, so 8,800 divided by 11 multiplied by 8, and that gives me 6,400. That's the figure, very, very similarly to the insurance. That's the figure that needs a double entry. So if that's rent for this year, well, then the easiest thing to do would be open up my P&L balance, because that's again, so it's increasing my profit, so 6,400 gets added on. Or in this case, it's again, 6,400 goes in there. Now, I'm going to do it the exact same way as I did the insurance. So go down here, go to my profit and loss balance. Again, a little gap there, plus €6,400. Now, when we did the insurance, we took it away from the account that was originally opened. Same principles apply here. The initial account that was open was rent receivable prepaid. So if there's 6,400 going in here, it means that it is not a liability. So 6,400 gets taken away from the account that was originally opened. All right, showing you in a T account. Technically, we only owe them 3 months rent. So I'm going to reduce this account by 6,400. So rent receivable prepaid, what am I doing here? I'm reducing it by 6,400. Okay, because it is no longer a liability because it relates to this year. Again, to back it up, 6,400 is my gain. That's the easiest part to add it on. And then I took it away from the account that I had initially opened. And that's my first bout of workings.